joining us today for our buy-to-let event and COVID-19. I'll kind of be giving you a brief rundown of how things are going to work, and then we'll kind of get on to the beef of the event. So to start with, I'll do some introductions. My name's Abby. I work at ESPC and I'm going to be your host today. So, I'll be giving you a rundown of how everything's going to work, and then I will be kind of firing your questions at our panelist. On our panel, we have Nikki Lloyd, who is Head of Lettings at ESPC Lettings. We also have Jill Andrew, who is a solicitor from one of our member firms. And we also have my colleague Leanne Watson, who has joined us today. And she is there. Hopefully we won't need to use her, but she is there just in case we have any sort of internet problems or connectivity goes down. But yeah, so how today is going to work. Nikki will give us a brief overview of kind of how things have been affected in the buy-to-let market so far with COVID-19. We will then move on to the actual Q&A section. So firstly, thank you very much for everybody who submitted the questions. It was really interesting to read kind of everything that everyone's thinking just now. What we have tried to do is focus on the questions that were around common themes. There was a couple of more niche questions, so if we haven't quite managed to answer your question, please do feel free to get in touch with us and we can put you in touch with one of our property experts. But for the event today, we've focused on the ones that were kind of around the more common themes. Once we've gone through our kind of Q&A of our pre-submitted questions, what we will then do is we will, if we've got time, open it up to more of a free kind of free-for-all Q&A. So in your kind of Zoom setup, you'll see a little box at the bottom which says Q&A. So as we go, please feel free to pop your questions in there and we will be able to try and answer some of those at the end, and we'll put our panel on the spot and hopefully they'll be able to answer all your questions and give you some good advice. Just to confirm, this is a webinar setup that we are hosting in Zoom, so we cannot see or hear you. The best way for you to communicate with us during the event is through that Q&A box, which we will come to at the end. Now, if we were in our info center, what I would normally do just now is just a quick kind of fire safety announcement. Hopefully we're not going to have any fire alarms go off in my flat. But what I will do is let you know if we do have internet issues. What will happen is my colleague Leanne will take over from myself. If one of our panelists has any problems with their internet, what we'll do is we'll kind of pause on that question and then we'll come back to it and ask the panelists the question again once they're able to reconnect, just to make sure that we try and get through as many of your questions as possible today. But yeah, that is kind of all from me just now. What I will ask Nikki to do is to unmute when she is ready, and she will give us a brief overview of how things have been so far.
Thank you very much, Abby, and thanks everybody for joining us today. As Abby said, we'll just be chatting about the buy-to-let market and how things have been affected and how we look to move forward. So I guess as a time frame from the beginning of the year until where we are now, it's fair to say that 2020 has not been a normal year, and all markets have been affected, the rental market the same as many others. So if we look back to the start of the year when Brexit was still looming, that just seems such a long time ago. And people were uncertain what was going to happen at the market at that stage. But the good news is the Edinburgh rental market was remaining strong. There was plenty of demand. Rent levels were high. Plenty of people were looking to get into the market as buy-to-let investors. So it was pretty much behaving as we would have expected at that time of year. We then hit March and things changed and we moved into lockdown towards the end of March, and that had a significant impact on the private rented centre across Scotland. The lockdown restrictions meant that we were no longer able to do viewings in person. House moves were only permitted unless they were deemed to be reasonably necessary. There were concerns about tenants and if they were going to have problems or if they were going to be able to pay rent at all. Landlords found themselves having to apply for mortgage payment holidays if their tenants were having difficulties paying rent. And the Scottish Government encouraged landlords and tenants to work together to be flexible, and they made it clear that during this time, tenants weren't to be evicted. You can still serve notice on your tenants, but what happened is the lease was changed, a new lease was drawn up for these specific circumstances, and it meant that the notice period has now been extended to 6 months. That's to be reviewed in September, so we'll see what happens then. And then we approached phase 2, and we generally all became quite excited that things were starting to relax. We were right to be excited. We saw a real surge in inquiries that started coming through from tenants looking to move. People still needed to move and haven't been able to, so they're really keen to get moving again. Lots of landlords who'd maybe put things on hold started to bring their properties to the market again. So yeah, we saw an increase in inquiries, and that was a positive sign. A little further on, and yep, there's more activity than we had really expected, and it's really encouraging to see how people are adapting to the changes, and are still able to move forward. We can now carry out viewings. We're still doing virtual viewings as a starting point, but if people are seriously interested, we can then go on and carry out physical viewings, and with all the appropriate safety measures in place, and we can now conduct home moves. So I would say, all in all, a positive start to the relaxation of the rules. People are still cautious, as we should be, but that I would be confident that the rental market is going to go from strength to strength, and it still be an attractive prospect for anybody looking to get into that market.
Perfect. Thank you very much, Nikki. Now, before we head into the kind of Q&A section of the event, just to let anybody know who has joined in the meantime, if you have any questions that come up during this section, please feel free to pop them in that Q&A box at the bottom, and we will try to get to those at the end. But before we start, what we'd like to do is kind of turn things around a bit and ask you guys a question, kind of to make sure you're listening. But what I'll do is I'll launch a wee poll that we've got just now, and we would be really interested to hear your thoughts on this. Now, the event that we held, I think it was 2 weeks ago, we managed to get about 90% of attendance to complete the poll. So I'm hoping that we get as good a completion rate for today. So if you could just take a minute to fill that in, that would be perfect. Oh, so we've got the answers coming in thick and fast. So our question was focused around how COVID-19 has affected your plans, kind of about investing in the buy-to-let market. So we're at halfway now. We've got 50% of people voting. I am positive that we're gonna manage to get close to 90. We're at 80% now. Just need a couple more people. Be interesting to hear kind of everyone's thoughts on this one and general sentiment. So I will give you one more chance to fill it in. Right, I think we're going to end at 85, but I reckon that's still pretty good. So what I will do is I will end this here, and then what I can do is I can share the results with everybody so we're all able to see. So our question was, how has COVID-19 affected your plans to invest in the buy-to-let market? So interesting to see that kind of the majority of people who are with us today are saying it hasn't changed their plans. They're already in that kind of buy-to-let market and they weren't planning to kind of invest further. What is quite interesting as well is that we've got 18% of people who've joined us today who they weren't considering buy-to-let before, and they are now. So we'll hopefully be able to kind of give them some good advice today on how things are in the market. But yeah, thank you very much for answering that. I thought some really interesting responses. But right, now we are on to, let me just move this off my screen. Perfect, now I can see our panelists. So now we will move on to our Q&A section, and just remember, any questions that pop up as we go, pop them into that Q&A box. So we're going to start off with Nikki with our first question. So our first question is, What are the restrictions on moving, and what is the likely impact on people wanting to rent?
Okay, well, just going back to the poll, that was really positive, and that people are either still looking to get into the market or already in the market and looking for more information. So positive, certainly all round. So restrictions on moving. So there aren't as many restrictions at the moment, so people can freely now move property. However, the process of finding and moving is different from what it was previously. So as I've mentioned previously, if you are a tenant and you're looking to rent a property, the initial viewing that you have will be virtually. So that will be either somebody walking you round virtually or sending you a video link so that you can see the property. And then landlords and agents should really only be doing physical viewings if that person is showing a serious interest in the property. Actual viewings should not be group viewings. They should be by appointment only, one-to-one basis, and ideally in a vacant property. We would recommend that you and the people viewing don't touch any surfaces, you adopt social distancing, hands are washed prior to meeting, and that you do use some form of face covering. So the application process is the next, if they decide to go ahead. Applications, references, lease documents, all those things can be done electronically. So actually that part of the process has been largely unaffected. So once you do have an applicant, you can move forward and do everything electronically. Then actual moving into a property, that's fine. You can meet your tenant, hand over keys on the day that they're moving in, and you would just need to follow the same safety rules as you did at the viewing. So don't touch surfaces, social distancing, wash hands, face coverings. So what we're finding really is people are able to move freely and are interested in moving now. Tenants are aware of the changes and how processes have changed in terms of being able to view the property. So it's not having a great deal of impact in terms of people now looking to move. So people understand what's happening and they're making the appropriate arrangements, and we're not finding it any great impact just now that the relaxation has come into force. Yeah.
Perfect. Thank you very much, Nikki. Now, this next question I think was our most commonly asked question. So I hope you are ready to answer. So our question is, and this is for Nikki, how has COVID-19 affected the buy-to-let market?
So it's fair to say from the date that we locked down until restrictions were eased on the 29th of June, for that entire period of time, the market for buy-to-let and tenants looking to move was essentially closed. So nothing happened. There was no movement during that time unless it was deemed necessary. People that were key workers that needed to move properties, but only really under essential circumstances. So there's been a largish chunk of the year where things haven't moved. Um, and whilst if you were a landlord at that time, that's maybe not great news for you. But if you're a landlord kind of now or looking to move into it now, what it's meaning is all of those people that needed to move that couldn't now want to. So now that we can, we're seeing that there has been a real surge in interest, and things are really kind of kicking up in gear now that people can move. There's been a lot of pent up desire for people to move, so they're really getting things moving. The same with the purchase. There's been that pent up kind of desire to want to make a purchase and not quite being able to. So people are really getting things moving. Expect after this initial kind of relaxation, when things start to become a little bit more mainstream, if we like, then we'll see more of a normal pace return. But it's certainly been a busy time now that we're back. In terms of rent levels, we have seen rent levels stay the same. Those properties that were maybe vacant during the lockdown period, it kind of didn't matter what your rent was because nobody was moving anyway. And now that they can, we're seeing that rents are just really staying on the same path as they had been at the start of the year. So there's not been any drastic need to start slashing rents to make the property attractive. Rents have remained steady. And then, as I say, in terms of finding the tenants, as I mentioned before, that process has changed. Um, it makes things a little bit slower because there are extra cogs in the wheel. So maybe the quick time to let that we had seen previously, where things were being snapped up and tenants were moving in really quickly, that's going to slow down. But it is only because there are a few extra cogs in the wheel. And just be aware of it, and factor that into anything. But we're certainly coming out from the other side now.
Perfect. Thank you very much, Nikki. And just for anybody who has joined while we were kind of going through that, we're in the Q&A phase just now of the event. If you do have any more questions that pop up as we go, pop them in that Q&A box at the bottom and we will come to those at the end. So moving on to our next question, and this is for Jill. Jill, is now a good time to invest in a buy-to-let property?
Well, $1 million question, isn't it? It's certainly in light of the fact that most of us are not going on holiday, probably not abroad this year. It's the year of the staycation, or as I said to somebody yesterday, the Scotcation. If we're going to promote tourism in Scotland, then I think it's a great opportunity. And having buy-to-let properties around for all sorts of reasons, be it a short term or as Nikki's been alluding to, the longer term rental is an opportunity. People are looking for other investments out there for their money. You're earning probably 0.1% on your savings at the moment. So people have investments. They're looking at something as a long term investment, and property has always been attractive. Edinburgh in particular has a long history of being an attractive residential property market for buying to let in. Even going back to the sort of 30s, 40s, and 50s, majority of people were renting rather than owning their properties, and that was seen as an investment platform for people with their spare money. So whether or not that's something that floats your boat, I guess if you're listening today, then it's absolutely something that you want to consider. The interest rates have probably never been as low as they have been. There's great opportunities on the mortgage front on buy-to-let properties as well. So would I buy? I probably would buy just now. There are good opportunities. The market's busy, and there are people looking to rent, people looking to move. People have been shut up in their flats that they've been renting before and thinking, gee, I wish I had a space to put my work computer so that I'm not balancing it on my knee, or I'm fed up of my 2-year-old bouncing around my feet. I wish I had a garden that they could be in. So for lots of other reasons, I think that there will be a bit of movement in the rental market, with tenants actually looking to see what they would like as an alternative. And for that, there may well be slight differentiation on the market as to what people may consider buying as a buy-to-let property. Whether or not the figures on one and 2 bedroom flats will fluctuate. Perhaps people have a 1 bedroom, think, well, actually, I'd really like the spare room to work from home, or I wish I had a bit of outdoor space. So people may consider things that probably you wouldn't have considered before as buying as a buy-to-let property. They may well open up a different market to houses or colony flats as well, something like that, with gardens, or modern developments with more outside space, or contained and safe outside spaces as well. So I think basically with every crisis there's an opportunity. So there's certainly going to be opportunities for people to invest out of all this, and Edinburgh, the prices have always been good, and the rental returns have always been good in Edinburgh as well. So I think there's a solid market here, and I think that people will be looking to build on that rather than looking for it to decrease.
Perfect. Thank you very much, Jill. So our next question, what protection is there for landlords where a tenant cannot currently pay the rent?
Sorry, that's me.
Yeah.
Sorry, that's at the moment, what you've got is the government's, as Nikki said in her introduction, I said you're not to throw tenants out for not paying the rent. They've been given special dispensation. You're not allowed to serve notice on your tenants for the first 6 months. So the steps that the government put in place initially were the short-term emergency loan scheme, and just check my figures and dates, that the loan scheme opened for applications on the 5th of May. It's an interest-free loan available to landlords who have 5 or fewer rental properties, and that funds lost rental income from a single property, which was designed to take pressure off landlords. But again, as Nikki said, if tenants are having difficulty making rent payments, you as a landlord should engage with your tenants, speak to them, don't ignore them, see what you can do to help, see what you can do to make arrangements. But in terms of protection, there's no other absolute protection other than presumably come September you will be entitled to evict your tenant for non-payment of rent, and to pursue them through the courts and the panel on the usual criteria, unless of course we get any form of change. We're going into phase 3 this week. There may well be new regulations or rules issued on these things by the Scottish Government, and again that may come into phase 4, where they may come out with different changes, whether that be protecting tenants for longer if the government feel that that's going to be necessary, or indeed whether they feel it's going to be necessary to help landlords further if there's perceived to be an issue with non-payment of rent, which may well come out of the ending of the furlough scheme and any other such fallout that comes on from there. But unfortunately for landlords, there is no magic button to say you are protected, the government will give you all your rent back or anything like that. It's really a case of beware. And of course, in addition to the government loan scheme, that you've got the option, if you're a landlord with a buy-to-let mortgage on your property, you can speak to your lender, of course, with regard to mortgage payment holidays as well. But I think opening up dialogue with those that you need to, your tenant, your mortgage lender, anybody else that you're having to pay bills to, is absolutely the way to protect yourself as best as you can in the current circumstances.
Perfect. Thank you very much for that, Jill. And just for anyone who has joined in the meantime, that Q&A box down at the bottom, if you have any additional questions for us as we go, pop them in there and we will try and come to them at the end. So we are moving back to Nikki for our next question. And our question is, how is the energy performance certificate going to be affected? Is there a new estimated date for the EPC rules to go into force?
So we had been given guidelines, and we were working towards the 1st of April 2020, where the minimum the minimum rating of your rental property needed to meet certain levels, and that needed to have been in place by the 1st of April. That's been delayed now because people generally couldn't maybe get the work that needed to be done, or it just wasn't going to be possible in the circumstances. So the Scottish Government have pushed that back. And the moment the guidelines say they will continue looking at the guidelines once the COVID crisis has come to an end. Now that's very open-ended. They haven't really given any time when they're going to review that again. there is a possibility that the next trigger point or the next date where the next suggestion of restrictions or guidelines needed to be in place was to be from the 1st of October, and it's possible that it could be triggered from that time, but as of yet nothing has been confirmed. We do keep in touch regularly. We are always looking for updates, and any news that we get on anything related to whether it be the energy performance certificate, changes in the lease document, changes in anything at all, then we will update our web pages so that you can get up to date information. Our guys are keen on that, that we're here to be able to offer all of the expert advice. So at the moment it's on hold. There's a possibility that it could be the 1st of October, but really nothing confirmed just yet, I'm afraid. So yeah, keep an eye on the website.
No problem. Thank you very much, Nikki. So we're moving back to Jill for our next question. And our question is a short-term holiday let a good investment?
This comes back to the point I made earlier about Scotcations and staycations. Absolutely. I was speaking to one of my colleagues in the Glasgow office this morning who's booked herself a weekend away at Loch Lomond, and the rental was 480 quid for a one-bedroom cottage for 2 nights.
Wow.
And she found the price for pre-lockdown price, which was half of that. So there is money to be made, but in fairness to those that have been not had any income from renting this out for the their properties out for the last 4 months, they've obviously got to try and recoup some of their costs. There's additional costs in putting in place all the distancing and health and safety measures for renting. But absolutely, I don't think many of us will be getting on a plane in the next 6 months, I suspect. So looking to holidays in this country, so short-term holiday lets, definitely a growth industry and a growth area in Scotland in particular. We have a beautiful country. We live in a beautiful city in Edinburgh. ESPC itself has got members. Dumfries and Galloway is a gorgeous part of the world, and where I went on holiday as a kid, so I got very fond memories of holiday cottages over that side of the country. Glasgow city centre, Glasgow is a fabulous place to go and stay if you want to visit as well. So many art galleries, buildings, architecture, and then of course I think we probably live in the most beautiful city in the world in Edinburgh ourselves, and so many people want to come to Edinburgh. It's I think been voted the best small city in the world, and the best place that tourists want to come for years on end in various tourism polls. So catering to the needs of people who would like to come always makes for a good investment in terms of property, and being able to facilitate that to meet the needs and demands of the fee-paying public effectively is a good way to go. In terms of buying this, if your money's burning a hole in your pockets, then possibly it's much better investing it in bricks and mortar, as would always be this sort of tale your granny would tell you, rather than sticking it in the bank where again you're getting very little return for your money. And the other option, of course, is not necessarily flats that we're talking about as a buy-to-let, or sorry, as a holiday investment, but the market for more rural properties, or again properties which have a main door and a garden and additional facilities that you can offer people, especially they're looking for that kind of thing after lockdown. I think again more chats that you'll have heard on the media about shops running out of hot tubs and all such other things. So the more of those sort of add-on and optional extras that you can provide along with your short-term holiday let accommodation makes you more attractive and a better investment all round. So I think you've got to be careful with what you buy, and remember that you're not buying it for yourself, you're buying it as an investment, and you're buying it for other people to like, not what you like, and foisting your own personal tastes on these things. And that applies to the type of property you buy as well. You have to be very careful and take good advice from your agents. And again, there are tax implications as well. So speaking to accountants, solicitors, and taking proper financial and tax advice on all of this is the way to go. The ESPC have their own mortgage advice centre as well, and they're able to provide you with mortgage advice. There are very few lenders who will provide specialist holiday let accommodation mortgages. So again, you can't just buy a holiday buy-to-let mortgage and turn it into holiday accommodation. You must be very, very careful with what you do in terms of your financing. So loads of things to think about as well, and perhaps that the best advice at the moment would be try before you buy, and get out and boost the economy in Scotland, and go on a Scotcation this year, and see how you get on first.
Perfect, thank you, Jill. And I've got a bit of a follow-up question to that one. So our question is, will Edinburgh City Council be changing their short-term holiday let policy?
Yeah, I kind of alluded to that when I was mentioning main door flats and houses, which may well be the way that you need to go in Edinburgh at the moment. A lot of you will be aware of some of the negative press that was going on probably at the turn of the year with regard to particularly Airbnb lets in Edinburgh, and the proliferation of them in common stairs. And that's absolutely something that you need to take cognizance of if you are thinking of buying a flat purely as an Airbnb investment. If it's a holiday home for yourself, and you're looking to rent it out occasionally, or for the odd week or two, then you're probably absolutely fine. You're not going to breach any legislation. But Edinburgh in particular, going down the route of insisting that this is a change of use in terms of planning law with regard to flats in a tenement stair, that it's a commercial enterprise. You are not using it purely as a residential dwelling, and as such you would need planning permission. So again, you need to be speaking to your legal advisor and your legal teams with regard to that. There's change with regard to planning, which was brought in by the last Planning Act. It's not yet enforced, but again, that's going to bring in changes which may well lead to looking at getting a change of use from ordinary residential use of your tenement flat to specialist buy-to-let option on a planning permission. And of course, there's no guarantee if you apply for a planning permission that you'll actually get it as well. So different scenario when it comes to main door flats and houses. They're a different planning category from a flat. So there's clearly much more freedom to do a short-term holiday let with a house or a main door flat than there is with something in a stair. And certainly Glasgow Council went down the route of main door flats were okay, but not tenement flats, and they've entrenched that in their own rules in Glasgow. And I suspect that that's the route that other councils other than Edinburgh as well will take going forward. The other thing is to bear in mind with all of this is regulation, which is proposed, and I think is a great thing actually. All for regulation of short-term holiday lets, much the same way as landlords have to do with their normal lets and buy-to-let properties. You have to be registered as a landlord. You need to have safety certificates for your gas, for your electric, for your electrical systems, and I see why shouldn't you have to do that if you're renting out your holiday let to the public as well. You should absolutely want to make sure it's safe, and if you get some form of safety accreditation for having all that it makes your property so much more desirable to people and families in particular looking to rent it out for their holidays. If you go to a hotel, you know that they've been assiduously checked out with regard to their health and safety and their procedures. So the same to apply to a holiday let is absolutely a positive as far as I can see.
Perfect. Thank you very much, Jill. So our next question is back to Jill again, and it is currently, what is the percentage over the asking price that flats in Edinburgh are selling for?
Here's my magic crystal ball. Yeah, absolutely. If I had £1 for everybody who'd asked me that in the last 20 years, then I wouldn't be sat here today answering your questions. I'd be on a desert island that was COVID free. But there is absolutely no answer to that question that I can give you at the moment, actually, or ever. And I doubt anybody would ever basically stake their reputation on giving you an answer to that question. It's very much depending on the market, the town you're in. Obviously, Edinburgh is a different market to Glasgow, Aberdeen, the rest of the sort of smaller towns in the countryside. Edinburgh, again, it's there's different markets for which bit of town you're in. It's not even the north and the south. It's divided up into our little villages, as they really are in Edinburgh. So if you're looking at the new town, the village of the new town, you're going to pay a very different percentage over the asking price than you are for something on the outskirts of town in say Gilmerton or Cramond or other places. Everywhere has its own distinct market, and people have their own reasons for wanting to buy in these areas as well. So you need to basically look at your market, look at the district that you're buying in, and you also need to take account of the property that you're buying as well. Sometimes you might think, oh, this house has not been done up since 1985, and it's got an avocado bathroom suite, and it's got swirly carpets, and it's absolutely hideous. Nobody else will want to buy it, but you want to buy it. So if you want to buy it, somebody else might want to buy it. So your reasons may be exactly the same as somebody else's reasons, and the more notes of interest you get, which is obviously the positive if you're selling with the Scottish system, and the negative if you're buying, the more notes of interest generally means the higher that the price will fight its way up, because you don't know who you're bidding against, and you've no idea if they're cash purchasers, if they're buying because granny lives around the corner and you need her to do your babysitting because you're working, or whatever else. And people, if they've got the money and they absolutely have to have it, basically there's no stopping them. Short of whatever cash they can afford to throw at something, and you simply can't second guess what your competition is going to do. It's like sitting in an auction bidding for that diamond ring or that painting that you absolutely have to have. You've set yourself a limit that you're going to bid in the first place, and when it gets to that limit, you've got to sit on your hands because you can't afford it, and it's not worth making yourself bankrupt or sleeping in a tent for the next 4 months to afford that property. You've got to be reasonable. You've got to set yourself a budget, set yourself limits, and work within that. Of course, you will pay a premium for certain areas. As I mentioned, the new town is always going to get a premium for the properties. It's so near everything. You can walk everywhere. You don't necessarily need to have a car. You get a beautiful period property that everybody loves, and is one of the selling points of Edinburgh, and why people love the city. But on the other hand, you might be wanting to buy a modern property because you want 4 bedrooms, you want a garden, you want an easy lifestyle. Then the chances are that the premium for something on the edge of town like that, and a modern property, won't be as high. But basically, number of notes of interest as a rule of thumb, the more notes of interest, the higher over the asking price you'll end up going. But you can end up, some people will pay, I think we sold a bungalow in Morningside last year and ended up at being 24% over valuation. So I'd love to tell you that that was the norm, and we sell all our properties for 24% over valuation. But sadly, that's not the case. If you're selling and poor purchasers, you absolutely don't want to hear that at all. So it really is reasonable. You've got to set yourself a budget for what you're looking at, what you're buying, and again, you're buying this as a buy-to-let property or a holiday-let property. It's an investment. It's got to work for you, and you've got to make your numbers balance up.
Perfect. Thank you very much, Jill. Now, I am aware that we are kind of coming close to Q2, which was when we said our event was going to kind of close up. So what I'm thinking, I would prefer us to get a chance to ask some of your kind of questions that you've submitted as we've gone through the event. So if there is any of your pre-submitted questions that we've not got to today, please do get in touch with us. We are more than happy to answer them and either chat over the phone or over email. But yeah, if we've not quite managed to answer anything, please do get in touch. But there has been one question in that's come, and hopefully Jill and Nikki will be able to help with this one. And I think it is quite topical. So our question is, following the announcements re stamp duty in England yesterday, do you see Scotland following suit? And would this extend to second properties?
Jill, I'll leave that one to you.
I got all the tax questions. Great, thank you. The finance secretary has said that she is going to make a follow-up statement. It's now 1:45, so that was starting, I think, at 12:30. So if she's said anything, I don't know. I've no live access to tell me what that may or may not be. Yesterday's announcement by the Scottish Government was that they were not going to follow suit, that LBTT, which is Land and Buildings Transaction Tax, a bit of a mouthful, the Scottish equivalent of SDLT and our stamp duty, they were not going to make any changes. The Scottish Government believe that LBTT is a progressive tax, and the majority of purchasers in Scotland don't pay it anyway at the current rate of the average house price in Scotland. On the flip side, the average house price in Edinburgh, more or less, everybody pays it because the prices in Edinburgh are so much higher than the rest of Scotland. But the Edinburgh market, although big, is not enough to make the balance sway out in our favour. So I think if they make a concession, it will not be as generous a concession as that made by the UK government, which affects England and Northern Ireland yesterday, which was up to £500,000. I think if we get a concession, we'd be lucky if we get half of that, which would be 250,000. That would be my estimate on the best case scenario if we get anything at all. And I'm 50-50 as to whether or not public pressure from people such as yourselves and asking questions at forums such as this today is sufficient to raise the profile of the differentiation between Scotland and the rest of the UK and whether or not we can do this. In terms of whether it applies to second homes, yes, in England it did, but where the difference lies in the second homes, you'll be aware if you've looked into this, we have additional dwelling supplement, so ADS as it's referred to, and that applies both in England and Scotland. The English rate is 3% of the total purchase price. In Scotland, it's 4% of the total purchase price. So if you're buying a buy-to-let property in Scotland at the moment at 300,000, you'll end up paying your LBTT on the 300,000, and in addition to that, you will pay an additional 4% of the £300,000 on that. The UK government said there was no cutting of ADS, additional dwelling supplement, in England, so I absolutely say that there's absolutely no way that the Scottish government will go down any route of cutting that. So I think you've got your 4% regardless, and you may get some form of small concession with regard to the LBTT. Case of watch this space, and obviously if the Scottish Government do make any changes on that, the ESPC will be updating us all on that, and their website is the place to go, along with your usual news channels online, I suspect.
Perfect. Perfect. Thank you very much, Jill. I know we have got our kind of content editor watching the update as we speak. So if there is any news, then I would definitely encourage people to have a look on our website or our social media, because we do tend to kind of share the latest updates. Now, I'm aware we've gone a little bit over time, so we'll just finish up there. But as I said, any questions that we haven't managed to get to today, please do get in touch. I know that both Nikki and Jill will be more than happy to kind of answer your questions. I suppose it's probably the kind of thing we could talk about all afternoon. But yeah, so all I've got to say is thank you for joining. Do